Key events to watch, week of January 6, 2025. Let's now take a look at the key events scheduled for next week, which will likely drive market sentiment and create volatility in the Forex market. Here are the most important events and predictions for each. Monday, January 6, Eurozone Retail Sales, DEC, and US ISM Services PMI. First, on Monday, we'll have the Eurozone Retail Sales data for December. This figure will give us insight into consumer spending across the Eurozone and could have a significant impact on the euro. If retail sales outperform expectations, the euro could continue its bullish momentum, especially after the ECB's hawkish tone in recent weeks. Conversely, a disappointing result could weigh on the euro, potentially sending euro to US dollar lower. We also have the US ISM Services PMI, a key gauge of the services sector in the US. If the PMI shows expansion, it could support the US dollar, as it would signal strength in one of the most important sectors of the US economy. A strong ISM Services PMI reading could provide further fuel for USD bulls heading into the rest of the week. Tuesday, January 7th, German industrial production and Australia trade balance. On Tuesday, we'll see German industrial production data for December. This will give us a sense of how the manufacturing sector is performing in Europe's largest economy. A stronger than expected reading could boost the euro, while a weaker result could raise concerns about economic slowdown in Germany, potentially dragging the euro lower. Meanwhile, Australia's trade balance will be in focus as well. Given Australia's reliance on commodity exports, especially to China, a positive trade balance could provide support for the Australian dollar. If the trade balance continues to show surplus, expect the AUD to find some strength, particularly if China's economic data releases come in better than expected. Wednesday, January 8th, FOMC minutes release. Wednesday brings us the release of the Federal Open Market Committee, FOMC, meeting minutes. This document is crucial for understanding the Fed's thinking on interest rates and inflation. If the minutes reveal a more hawkish stance than expected, the US dollar could see a surge as traders price in the possibility of higher rates in the near future. Conversely, if the minutes indicate more caution about further tightening, we might see a softening of the dollar, particularly against currencies like the euro and British pound. Friday, January 10th, US Non-Farm Payroll, DEC, and Canada employment change. Finally, on Friday, the US Non-Farm Payroll (NFP) report for December will be released. This is one of the most closely watched economic reports, as it provides a detailed picture of the labor market in the US. A strong NFP report with solid job growth and wage increases could trigger further USD strength, especially if it raises expectations for continued rate hikes by the Federal Reserve. On the other hand, a weaker report might signal a cooling labor market, which could cause the dollar to weaken as market expectations shift. Alongside the NFP, we also have Canada's employment change data. Like the US jobs report, Canada's employment numbers are key in gauging the health of the economy. A stronger than expected result could support the Canadian dollar, especially if oil prices remain strong. If the data comes in weaker than expected, however, the CAD might struggle to hold its ground, particularly against the US dollar. Predictions for next week. Looking ahead, these key events will likely drive significant volatility across the Forex market. If the US non-farm payrolls come in strong, we could see the US dollar gain against most currencies, especially the euro and British pound. However, any surprises in the FOMC minutes or disappointing economic data could cause the USD to lose momentum. For the euro, positive retail sales and industrial production could help it maintain its bullish trend, while any signs of weakness could result in a pullback. The Australian dollar's fate will largely depend on China's economic health and global risk sentiment, while the Canadian dollar will remain closely tied to oil prices and employment data. Conclusion. So, as you can see, next week's events are packed with potential market-moving data. It's going to be a volatile week, so stay tuned for updates and make sure you're prepared to adjust your trading strategies based on the results. As always, keep an eye on economic data, central bank policies, and market sentiment, as these are the factors that will likely dictate currency movements.